Welcome, traders, to another Tickmill trading update with me, Patrick Munnelly. Want to take a look at the US indices as we head into a new trading week. Obviously, we had a certain degree of geopolitical tension heading into the weekend, which saw some risk-off deleveraging into Friday's close. We came within 6 or 7 points of the equality objective, the double corrective equality objective we're targeting, the 5140s. As we head into this week's session, I'm using the 5210 to 5220 as the bull bear zone. So looking for any pullbacks today into the 5180, 5160 area. Watch for bullish reversal patterns there to basically play for an initial three-wave corrective move into test the bull bear zone from below. Now, if we find sufficient supply in there, there's still a chance that we trade down and test into our 5140s. If we can manage to get a daily close back through the bull bear zone, then I think that sets up the potential for an extension up into our trend channel resistance initially at the 5250s. Then as the bull bear zone acts as support, we can start to think about testing our new range resistance up into the 5280s, which coincides with weekly projected range resistance. Now, to the downside, if we test the 5140 and we bounce but don't make a meaningful bounce, I reclaim the midpoint of this descending trend channel coming in at the 5190 area, there is still the potential of another leg to the downside to test into 5100. 5111 being the 38.2% retracement of this last leg to the upside. So that's the downside levels. Again, I would be watching for potential reversal patterns there to trade that from the long side, but just some areas to be cognizant of as we head into the week here. Let's take a look at the Nasdaq. So the Nasdaq has been trading also in a corrective fashion, seeing some decent volatility in most of these US indices. As we head into the week ahead, I'm looking at this 18,300 to 18,350 area. If we can't get through there and we get bearish reversal patterns, we still have an equality objective versus this broader swing structure in play versus the 18,519, which would set up a move to test 17,864 weekly projected range support just below there. Again, I would be watching for bullish reversal patterns there to at least play for a tradable bounce back into test the 18,100 level from below. The alternative scenario is buyers take out the bull bear zone, get a close through the 18,350, sets up a test of the trend channel resistance just below 18,500, and then on, if we can hold the bull bear zone from above as support, we look for a test of the value area high, 18,590s. Last but not least, the Dow Jones. Similar type of setup to the other main indexes here. We had last week looked for this corrective structure to complete an ABC move, which we did. Bounce was shallow. We since have rolled over, and so we're now using that recent swing structure to give us a new downside objective. So versus the 39,354, we have 37,859 to play for on the downside. So what I'll be watching for with the Dow Jones is any three-wave corrective moves back into the bull bear zone here, 38,585 to 38,720s. Watch the bearish reversal patterns there to engage on the short side, looking for a test into the 37,859, where once again we may find buyers stepping in to attempt to reverse from that level. The alternative scenario is a close back through the trend channel resistance at 38,850s. That could suggest that we have a tradable low in place now with the Dow. Then any pullbacks back into the bull bear zone as support would set up a test of 39,000 and then on to weekly projected range resistance, 39,260s. As always, traders, plan the trade, trade the plan, and most importantly, manage your risk. Until next time, thanks very much.